is our market special, and our guest today on the show is a veteran of the market for many decades, Raamdeo Agarwal of Motilal Oswal. Raamdeo, it's good to speak to you again. You know, every investor that we speak to or we hear these days just seems so anxious. Why isn't a correction happening? The market is ahead of itself. The market has gone up so much, it will correct and fall almost immediately. How do you read this kind of anxiety that you're hearing from most investors today? How do you address such questions?
Yeah, very nice to talk to you then after a long time. You know, this question is coming loud and everybody is talking about that, and nobody knows these corrections, they will come, and it is that. So I'm kind of used to it, you know, these corrections and deep corrections also. I'm quite used to it, and that's part and parcel of life. I mean, any bull run or markets climbing from any level to any level, like in 2003, 2008, when it climbed from 5,000 to 20,000. You know, we had all these concerns on the way, and stories came out, and finally market picked out at 21,000. So I think we are in some kind of a climb, and how fast it goes, how far it goes, I mean, a lot of things depend, but these concerns will always remain. I mean, they were there very loud when index had fallen by 40% last year, and they were the same guys who were asking, why should we invest? This is a crazy market. It is down by 40%, and now it is up 100%, and still they ask the same question. So it is very, I mean, these things keep happening. I think one has to have faith in the stock market. One has to be ready for the 10-20% correction, and then the power of compounding of 15-17%, and then on top of it, if you are a good manager, then maybe you can make another 20%. So that's the kind of thinking I have. I'm reconciled to eventual corrections and power of compounding both.
But you've seen so many market cycles, Raamdeo. As we sit today, do you see any danger signs flashing, which tells you that something is happening in the market which one should be very cautious about? Any exuberance in terms of participation, any bubble-like valuations in pockets, IPO frenzy? Are there any signs which are telling you that something bad is going to happen, a big accident lies ahead? Are there any red signals flashing, or you think it's this normal caution that you hear about people or from people because they haven't seen a correction for a long time?
Yeah, see, there are 2-3 things happening which are very new to this market. One, we are coming out of COVID. This is a historical event. I mean, on the healthcare crisis, a lot of things have broken down. I think one of the things which has broken down is logistics. Global logistics are completely broken down, and the cost of logistics for many stuff, global logistic costs have gone higher than the kind of underlying profits or whatever. You know, if somebody is making 10% profit, the logistic cost has gone from 7% to 25%. So it has eaten away the entire profit. So these are crazy. I mean, things are breaking down one after other in many aspects. So we don't know, you know, what could happen to which company. And of course, when some companies suffer, some companies disproportionately benefit also. So the companies which are, say, inbound, the companies which are competing with the what you call imported material, they are much better off today because they don't have that the cheap imports coming into the country. So like polymers were being done, were coming in India very smoothly at certain price. Now the logistic cost of the polymers have like gone up by 15-20%. So the domestic guys can increase the prices by that much. So you know, so the profits for these guys, they have changed. So there are so many things changing. I'm quite sure in this quarter result, you'll see some companies suffering big time, which are doing very well, and some companies will suddenly show huge profits, which they were not expected to make profits. So a lot of things have gone haywire in this period. And then on top of it, you have extremely loose monetary policy all over the world, coordinated. So cost of money is very low despite high inflation or whatever is the inflation, but the cost of money and the inflation has no correlation right now. And the quantum of money is literally unlimited. So these are very, I mean, I have at least not seen so many. How do you handle so many variables at one time? You know, simultaneously working on the stock prices. So I'm trying to focus as much as possible on each and every company which I understand, which I like, and then go build up your portfolio like that, rather than taking a big call on what market can do in very short term.